With the Nasdaq and the S&P now back at all-time highs, this is not the time you want to be chasing stocks and being aggressive, okay? You're going to see a lot of bullish commentary come out now, okay? Because obviously when stocks go up, right, it's followed by positive news more. And when stocks are going down, you see more negative news. So always remember that, okay? Remember, the stuff you get tailored to, especially like YouTube videos, is what you want to see, right? So a lot of that stuff, you know, it's like Facebook, right? The stuff you see, the advertising is linked to you, right? It's tailored to you. So same thing with the stock news that comes out. But like I said, in my personal experience, this is the time where you want to be cautious. When stocks have already rallied big, we're at all-time highs. You have the VIX super low. We have a war escalating in the Middle East. Ukraine, Russia, who knows if that could escalate. You have North Korea, who's wanting to get involved in a war, okay, with South Korea potentially testing nuclear weapons. So there's a lot to this. And obviously with the Middle East, you know, Iran, it says they're going to retaliate, you know, with what happened. So like I said, this is not the time to be betting big on stocks, okay? Chip stocks, yes, they've had a nice run. We've seen NVIDIA, we've seen SMCI, right? But now you don't want to be chasing those guys. It's too late. So I'm not going to be recommending to buy anything except the small cap stocks that are still at decent valuations, okay? I listed a bunch that I think will do well once interest rate cuts happen, but with the market, the data coming in hotter than expected, showing a stronger than expected economy, don't expect a rate cut in March unless something in the future, okay, shows the data changing. Remember, it's all data dependent. Right now, the chance of a March rate cut now just went below 50%, when before it was at 1.95%. So that's how quick things can change, guys. And if the data keeps coming in strong, then a March rate cut will probably go down closer to zero. And then we're looking at June. And then, like I said, it all depends on the data. So that's why you want to be watching each week of what comes out. But right now it is earnings season. So any stock that crushes earnings and raises guidance is probably going to get rewarded. But if they miss on anything after the rally, you're going to see stocks fall big. And that would be a better time to dollar cost average again if you're long. But like I said, I would wait for the earnings reports to come out at this point if you're trying to get in a stock that has raged or rallied pretty strongly, okay? I don't want you to get burned. Like I said, this is where, you know, all these bullish news articles come out. Everyone's bullish, right? The greed levels are high. That's when something happens in the economy, people aren't ready for it, and the stock market takes a plunge. Or sometimes it happens, you don't know why it's happening, right? And you keep thinking it's going to bounce back, and it doesn't. It's because we've had a strong rally. We're at overbought. We're not at overbought levels anymore. But like I said, if you're not going to be in AI, you're really risking it. But if you do stay in the AI small cap stocks, like you've heard me talk about, I think there's opportunity in 2024, but they're not really going to get going until the interest rate cut happens, the first one. So remember that, guys. You could be chopping around or going lower for a little bit here until the narrative changes or data comes in weaker than expected, which would make treasury yields go down and then stocks go up, okay? So that's what I'm looking for personally. So I'm sitting back waiting for opportunities, like I said, with earnings. And like I said, you just got to see the big picture. And here's the thing, if you're looking past that first interest rate cut, those stocks will get a lift. But then if we're cutting more than one time, like 2, 3, 4, like the market still is pricing in, that means we have bigger issues, guys. That means a recession would be on the table most likely if that's happening. And that's a whole nother animal if we're in a deflationary environment. So I just want you to look and see the big picture. I think we're going to have to go through something at some point. And like I said, as a long-term investor, if you want to generate wealth, you're going to have to go through those big dips and be able to handle them without emotion. And like I said, dollar cost average when you get those big dip opportunities. And like I said, you'll come out on the other end of this, you know, much wealthier.